Alright, let's talk about some of the AMT triggers. So the fundamental reason for the AMT triggers because there are two systems, right? The regular tax system as well as AMT. And if there are some of the discrepancy between these two systems, and they will trigger the AMT. And you know what? The AMT actually got a huge jump of the tax that you're going to pay. So yeah, you have to pay special attention. Okay, ready? Let's get started. So first, it's really common for if you got extensive stock options. That is a huge trigger of AMT. Let me explain. So you know what? AMT, it's a jargon. Come on, ISO, another jargon. Let me just explain. It's a really easy to understand. So, for example, ISO. This normally for clients who is an administrative level, right? They enter into some agreements of the company that the company will give them incentive if they reach a certain goal, right? If they if they're management, if the company's the stock price reaching a certain thing or something like that, just the finance option. Okay, so basically it's not stock yet. If they reach a certain criteria, they can exercise this option, and they can exercise it and then become stock. Okay, so let me just give you some numbers. So let's make it real. All right. So for example, you are rewarded with some incentive stock options by your company, and this option. Remember, the option got a strike price. So let's write it down. Strike. Okay, I got a terrible spelling. You know what? Yeah, doesn't really matter. Strike. So the strike price, say is say $10. Okay, so basically you can strike, you can exercise this option, then you can strike, and then you can essentially buy this stock with just $10. Okay, but here's also a fair market price. So the FV, the fair market value, sometimes we call that fair market value, right? Fair market value, say that's I don't know, $50. Okay, let me write it more. $50. All right. So there is some discrepancy. So if you exercise the strike price, and basically you can using it's a bargain buy. Come on, you can use $10 to buy for one stock. You can buy right now if you go to the market, you buy the stock, you got $15, but you just exercise these options, you just use $10 to buy. So basically there is a big spread of come on, $40 spreads per share. Okay, and for example that total amount is so you got ISO of I don't know 10,000. Okay, 10,000 ISO, and then if you strike, you are going to get US dollars. You essentially you're earning this 400,000 US dollars in total. Okay, that's a total spread. Okay, and under that condition, if under the regular tax view, okay, you are exercising these options, and you exercise the option and you did not actually sell this stock. You're actually holding all this fair market value of $15. Multiply this to 10,000 shares. You're just holding all this stock. You did not sell. Okay? And you know what? A lot of people do not sell shares in order to avoid tax, because once you sell, you got income, right? You sell that, you got income. It's just like any other thing. You sell, you got income. You know what? You're going to pay the income tax. But under the regular tax system, if you just exercise instead of stock options, it's not income yet. Okay? So you only pay tax when you actually sell this share. Okay? And as I'm recording this video for the 2025, for example, say your taxable income, you got except for this, you also got your salary. Salary say $115,000 US. you know what? That's the taxable income. Okay, your salary is your tax income, even though you got like an ISO. Still, you did not sell all the shares, so it's non-taxable, right? So that's the regular tax view. But here's the thing: we got this AMT trigger here. So basically, under the AMT, the alternative minimum tax rule, that spread, remember, we're talking about spread here, that 40 multiply 10,000 US, 10,000 shares, that's approximately like 400,000, not approximately exactly, 400,000 US dollars spread is added to your income in the year that when you exercise, even though you have not sold the stock yet. So basically, then you use this and you say your salary is I don't know 100. Let me just write it down. 150,000 US dollars. Say this is your salary income, right? You use your salary income and you're adding this spread, even though you haven't sold that yet, and you got this specific number. So for example, you got like a 400,000 US dollars. You got the 550,000 US dollars. Okay, and then you check, because as I'm recording this video, this is constantly changing, right? And we will talk about the changes as well as the reform of the tax laws have certain impact. But right now, as I'm recording this, the regular step is that you check the AMTI. So basically, it's called alternative minimum taxable income, and then you include everything inside that, and then you got this like 550,000 US dollars, and then that's the AMT income. Okay, and basically, if you in 2025 you can find like jointly you got this AMT exemption, right? And unless you MTI is like above a certain threshold, as the threshold is constantly changing, I want to make this video future proof. Okay, so basically the general rule of thumb is that there is an AMTI, like the alternative minimum taxable income, and there's a threshold. If your AMTI is above the threshold, the exception starting phasing out, and you have to pay a minimum tax. Okay, and if you below this, you got like a fully exemption. So that's basically like a number one trigger of the AMT. Okay.